Good afternoon, folks, and welcome to the Daily Recap. My name is Sami Said, filling in for Scott Ruther this afternoon. Let's not waste any time and just jump right into it. So many traders expected the seismic political shift in the United States to be reflected in stock market activity, but we've been stuck in this 2% trading range since mid-December, as you can see here, noted by the chart. In fact, over the past few days, S&P 500 volatility has been dropping towards last summer's rock bottom levels. However, that trend may finally be resolving to the upside. In fact, over the past few days, the S&P, through today, the S&P and Nasdaq both hit new all-time highs, with the Dow Jones Industrial Average not far behind. As you can see, located on the chart here, this being the most recent day, as you see that big green bar basically engulfing the entire last week's activity of looks like sideways consolidation. When we take a look at the Qs, and as you can see, the Qs shot right up to all-time highs. It pulled back a little bit before the end of trading today. The Dow Jones not that far behind, still inching towards that 20,000 mark, even though we did touch it once and come back. So the S&P peaked at 2284.63 as we take a look here at futures. As again, the same kind of chart that you see in the SPY. Last Friday, T3's Chief Strategic Officer Scott Ruther said that a close above the 2277 to 2282 area could mean a move to 2325. So get your rally caps ready. If you're concerned about potential downside from there, Scott said that as long as we hold the 2254 to 2257 range, we can't get too bearish. The Russell 2000, as we take a look at the chart here, and bank stocks also outperformed by a very large margin, indicating that traders felt very comfortable putting more risk on today. On the downside, biotechs still can't catch a bid due to the ongoing fears of price controls. Gold saw profit taking, dropping 0.6% on the day. GDX, as we take a look at that chart, fell about 1%. As you can see, this was a candidate for a nice red dog reversal this morning. Energy was big in news today after Bloomberg News and other outlets reported that President Trump will expedite construction of the Keystone and Dakota Access pipelines. This drove up shares of energy pipeline companies, including TransCanada Corp, TRP. Look at that. Wow. Nice gap and go today. And then Energy Transfer Partners as well, ETP. Again, a similar looking chart. That one big bar basically engulfing the range of last week. Meanwhile, crude oil prices rose slightly ahead of inventory releases from the American Petroleum Institute this afternoon, and Energy Information Administration is tomorrow morning. Energy stocks were pretty strong today, with the S&P Energy ETF XLE up 1.3% on the day, and VanEck Vector's Oil Service ETF OIH also up 1.7% on the day. Elsewhere in the market, Verizon fell 4.4% after a weak earnings report. Wow, as you can see that gap down. And then while Chinese internet giant Alibaba, BABA, rose 3% ahead of earnings tomorrow. Well, folks, that'll do it for the daily recap. Thank you very much for tuning in this afternoon. Scott Ruther should be back in his regularly scheduled program for tomorrow morning with the Morning Call Express. So stay tuned and have a great evening.